traders lose millions daily because they don't know this EBP strategy, which has over 92% win rates. I've backtested this strategy for over 4 years and the result is insane, guys. The forex market will be rigged for you unless you use this in this video. Here are things you will learn in this video. I'm Victor Snow from Trading from the Soul, where smart money is simplified. If this helps, like and subscribe. The EBP strategy involves going to your daily time frame, guys. Let's find your engulfing candle, and before this engulfing candle, we want this engulfing candle to sweep this previous candle's low here. This is what I mean here. This is the low here. So this engulfing candle swept this low before what's engulfing this candle. The bullish engulfing is when we have a candle close above the open of the first candle. This is the first candle here, and can you see how this candle close above this opening here now? The bearish engulfing is when we have a candle close below the opening of the first candle. So this is our first candle, guys, and this is what the opening, and can you see how this candle close below it? After this engulfing, we want to see the ICT power of 3. ICT power of 3 is a concept taught by the inner cycle trader, which say that price moves in just 3 ways: an accumulation phase, which is something like a consolidation in the market; a fake out, which is what we call what a manipulation phase; and what when price action resume in its original direction, which we will call what a distribution phase. From this manipulation phase is where we will make our entry stop loss a little bit below that level. Let's see whether we can take some example. Heading on, after this engulfing, the next candle will open right here. It will look something like this. It will give us what our accumulation. It will then manipulate to the downside, and here gonna be our entry stop loss below these candles, engulfing candles low, and we're gonna target this draw on liquidity as our take profit level. Draw on liquidity is where price is likely heading to in the market, and which is simply the highs and lows of candles in the market. It is our distribution phase that will take us to this draw on liquidity, guys. So let's see some examples. Take a look at this example here now. This is our first candle and this is the low of the candle. And can you see how this candle would swept this low before closing at the opening of this first candle? Next is what we will get our discounted level in the market, which is simply when we draw our Fibonacci 2 from the low of this engulfing candle to the high of this engulfing candle. This 50% mark here is our discounted level. Here gonna be my entry, stop loss below here, and take profit this draw on liquidity. And can you see that how price action in a single day came back to this discounted level, tapped us in, and moved to our desired direction, guys? And this is a full take profit. So this was originally taught by Omar right here on YouTube, and I decided to check this out, and guys, it works marvelously. Back tested it like 4 good years and the result is insane, guys. You can catch this kind of setup every single day. If this one candle strategy is not being included in your trading strategy, you're simply playing chess with a grandmaster blindfolded. So heading on, still the daily time frame, Eurusd. Let's see whether we can find some of this setup right here. Can you see here, guys? Can you see how this candle engulfed this candle, and before it swept this level before this closure here? This is the low, this is a high. Let's get our discounted level. So the discount level is the 50% movement of what a candle. Imagine this: when you go out there to buy something, whatever you do, you must always want to buy at what a discounted price. That same thing happens in trading. And to get this, you click on the upper left hand corner of your screen, and your setting should look something like this. So once I've got my discounted level, I'll make my entry here, stop loss below here, and my TP gonna be this draw on liquidity. And let's see how the trade unfolds. Can you see how price action came back to this level, tapped on it before heading to my desired take profit level, guys? And that is a win for us. You can look at this like an accumulation phase, a manipulation phase we enter, and a distribution phase right here. Omar talked about sometimes we can have our take profit take days, like not only one daily candle, like 1 or 2 daily candle before it gets to our take profit level. So someone watching me will ask, Victor, no, how can we align this with price action? So this is the daily time frame of AUD/USD. You have to get number one, your trend, which trend is what the overall direction in which the price of what an asset is moving within a specified period of time. That means your trend shows your direction in the market. To get your trend is simply when market keeps taking out these highs in the market, and we only want to look for buys in the market. And when we are unable to continue breaking these highs in the market and come down to take out this low, we call it a market structure shift, and we will only want to sell in the market. We are in a downtrend. This example here now, let's look for our trend in the market. And can you see this high break this high, break this high, again this break this high, significant lows. It means that we are in an uptrend, and we only want to look for buys in the market. Now you can go ahead and look for this setup that I taught you, which is we have this one right here. Can you see the first candle low, and this candle swept it before closure of this first candle, something like this. And here going to be our low, and here can be our high of this engulfing candle. Next thing is you get your discounted level, which is mark your fib from this low to this high, something like this. I can make my entry stop loss below here, and I can target this high. Can you see how price action came back to tap us in and moved to our desired direction? That is a win for us, guys. Price action will always respect these key liquidity levels 92.8% of the times. I have back tested this for 4 good years. Can you now see why having this one candle strategy is really important? It's like a cheat code in the market. Let's look for another one here. Can you see this level here? Swept here before engulfing. We get our discounted level, and can you see how price action returned back here to this row of liquidity? And this is our full take profit, guys. But let's look for another one. Can you see this one? This engulfs, get my discounted level, something like this, and this candle tapped here and moved into this to my take profit, and that is a win for us, guys. The win rate of this is very crazy, guys. Again, can you see this one that happened here? A sweep of here before closing above this opening. I will get to my discounted level. Can you see how price action came back here to tap my discounted zone before taking me to my take profit level on this row of liquidity? And that is my full take profit level, guys. Let's see this one too. Swept here before closure, my discounted level. Price action tapped before taking me to my full take profit level on this row of liquidity, and that is a win for me. Look at this one too. Discounted zone came, retrace, move to my take profit. If this video is helping, guys, give me a like and subscribe. So this can also be applied to the weekly time frame, guys. So this will sell one candle strategy. Can you see this zone here? This level was swept before closing. Mark out our discounted zone, and can you see how price action came back to this level before climbing to our take profit level on this drawn liquidity? Now imagine from the weekly time frame you move to your lower time frame, guys, to get to your low of the week. As it talked about moving to the lower time frame to get the low of the week, that is where your low of the week can be formed. And he said that it happens every Tuesdays and Wednesdays. So imagine with this idea now, knowing exactly where the low of the week will be formed here now. And you see, you can be able to enter from a low here, stop loss below here now, and this will give you almost 1:8 RR in the market. This will increase your risk to reward ratio, guys. This strategy is like walking into a casino that the house always wins. But this time around with the rule book, the house always used to win. You have the rule book now. Can you see that you always be winning? Let me tell you, most traders just react to the market. The elites predict it. The retail follow the price. The banks control it. The question for you today is, which side are you on? If this helps show your support, give me a like and a subscribe. And besides, are you struggling with trading? I just began a 3-day free trading course on what it takes to actually become a successful trader. Link will be at this video's description. Want to learn more about ICT trading strategies? Click on the video on your screen.